In this video, we're going to talk about a stock market versus real estate, where you should be investing your time, money, and energy, what mistakes you need to avoid, and really what you need to do in order to build long-term wealth. So if you've been curious about stock market versus real estate investing, this is the right video for you, so stick around. So the very simple answer to this question is comparing the rate of returns for stock market versus real estate. I'm gonna start kind of going back from 1940. This is the same period that I'm using for the real estate and the stock market. From 1940 to today, what is the annualized rate of return? And for the stock market, the annualized rate of return has been 6.5%. So that's kind of where it is. I know in the often in the industry, 9% or 8% is quoted as the annualized rate of return for the stock market, but typically they start around 1980 or something like that in order to calculate their rate of return. I'm using 1940 because it's also what I'm using for the median household appreciation from 1940 has been 5.5% annualized. Stock market 6.5%. Median household value has increased by 5.5%. But it is not that simple. When we invest in real estate, we're not just buying for appreciation over time. We're buying it because there's more to it than that. For me personally, and for the recommendations that I make, is about really rental properties. We're buying these properties for more than just appreciation. Appreciation is just one component of the strategy. When you look at these rental properties, we're basically making a cap rate of about 8% on top of the appreciation. So in a cap rate of 8%, that means that I bought the house cash, then I'm getting rent out of that. I pay all the operating expenses, everything that I need to pay. Basically, my return on the house value of the property when I bought it is 8% annualized. So that's on top of my 5.5%. So now I'm at 13.5% return, which is significantly more than the stock market. So I could stop there, but some of you might say, oh, this is not really relevant, and you have vacancies, you have this, you have all of that you have to take care of. So okay, so let's just put that aside. Another advantage of real estate is leverage. So with leverage, I can put 20% down, and then instead of buying only one property, I can buy 5 properties with that same down payment. Have them also rent out. That way it minimizes the risk of vacancies, and that makes it more profitable and less risky. So that's one aspect of it. Of course, I have to pay the mortgage on these 5 properties. These 5 properties are appreciating as well. So I don't have only one property that's appreciating now. I have 5 properties. Then I paid a mortgage on these 5 properties for over 30 years. So for the first 30 years, the return that I had, that was 8% and stuff like that. So it's significantly less because I have to pay the mortgage, but I'm appreciating at that point. When I do the calculation here, I end up at a return. It brings my return from 13.5 to 14.5 or something to that around that area. So that adds another 1% on top of what I was already making. Another advantage: tax benefits. So there are significant advantages to owning real estate. Basically, the operating expenses for the properties are all tax deductible, something that you don't have on the stock if you buy a stock on the stock market. Another advantage is capital gains tax. There's something that you can do in real estate that you just cannot do in the stock market, is the 1031 exchange, where I can take my 5 properties after 30 years and then sell them to buy an apartment building or to buy 20 houses at that point. So basically doing a tax deferral on the capital gains indefinitely by moving the capital gains to more rental properties. So that's another advantage of that. The other advantage is also on the depreciation. So I can actually take a depreciation on the property that goes against my net operating income. And sometimes that actually affects the overall net operating income significantly enough that you don't have to pay taxes on the income, the cash flow that you're making from that property. So you're getting cash in the bank, but you're not paying taxes on the cash coming in because of the depreciation of that property. And finally, another thing on top of that that the real estate investment has on top of the stock market is that you're in control. You're running the business, and then you decide that you want to invest in, you want to make these kind of renovation, you want to improve the rent, you want to, there's certain things that you want to do. So you have a lot more flexibility. You're in control and of the investment, as opposed to the stock market where you're basically just buying a piece of paper and you don't have real control of the company, how it's being managed. And sometimes, it happened that some companies on the stock market have been mismanaged, and then all of a sudden your stock price goes straight down. So don't get me wrong, I have nothing against the stock market. I love the stock market. I think I've invested in the stock market. I've lost millions of dollars in the stock market in the dot-com crash in 2001. And even after that, I still invested in the stock market. So I love the stock market, but if I'm going to compare returns, then I would have to agree that the real estate investing is a better investment for the long term, build a legacy for your children, and have much better returns. One advantage of the stock market is liquidity. So you can easily go into, if you need the cash, you can easily sell your stock and get your cash right away. So something obviously that you cannot do with your real estate property. If you want to leverage the equity in it, you have to go through a process of getting that mortgage or that loan out. If you want to sell it, then, it's problematic, definitely. Stock, you can just sell it and you have your money at the end of the day. I think that the liquidity is an important factor in all the investments that you do. I would recommend that 90% of your investment actually be in real estate because it has such higher returns and has tax advantages that you don't have in the stock market. And the rest, invest in the stock market, allows you some liquidity, some flexibility, take advantage of opportunities quickly. Just a couple of tips as if you are going to invest in the stock market. The first one is that just remember that the stock market is not the economy. So you have to watch the economy. Sometimes the stock market is a little bit out of sync, and we're seeing that today, where the stock market is at its maximum as a top, and then we have the economy that's potentially about to descend into a big hole as we're trying to do a recovery after this or through this pandemic. Another thing I want to talk about is the stock picking. So I think, obviously part of the fun in investing on the stock market is picking a stock, picking a company, analyzing it, and all of that. So in 2008, Warren Buffett challenged hedge fund managers to a little competition, see who can make the best returns over a 10-year period. Hedge fund managers, as you know, very active trader, have lots of mathematicians working for them, super fancy business model and financial models, computers, high frequency trading. They have everything. They have all the data. They have access to everything that you can imagine. So they set off to trade. And Warren Buffett basically simply put his money in the S&P 500 EFT, basically invested in all the stocks of the S&P 500 in the same percentages that they are invested in on the S&P 500 index. And then 10 years later, the hedge funds basically managed to do 22% cumulative return after 10 years, while Warren Buffett did 85% cumulative returns for that same period. It started at the same time, ended at the same time. Warren Buffett didn't spend a minute thinking about his investment, just put it right in that AFT, that S&P EFT, and really beat these hedge fund managers who are charging huge fees for managing this and claiming that they can beat the stock market every time. So this is just to tell you, if you want to pick your stock, all power to you. But remember that in the long run, investing in the S&P 500 or an EFT index like that is potentially a better way to go. You don't have as much trading, don't have as many fees. As Warren Buffett demonstrated, you end up in a better place at the end with a higher return than if you were trying to pick stocks. Well, thank you for watching this video. I hope you learned a little bit more about the difference between the stock market and real estate investing and what are some of the key advantages of real estate investing. While you're here, don't forget to watch the other videos on my channel and don't forget to subscribe.